This topic is kind of a summary topic of topics we already know. So we've already done things on stakeholders and corporate social responsibility. All we're doing is considering them in the context of change. So possible exam questions will look very familiar to earlier in the course, where we're asked to describe, explain, or outline the interest of a certain stakeholder. But all we're doing now is changing it and saying discuss, explain, or outline the impact of a particular change on those stakeholders. Or maybe the question says, can you discuss or evaluate the impact of a change on those stakeholders? The second little part of this particular topic is define the term corporate social responsibility, which we've done earlier. And then all we're going to do that's different is we've done CSR in the past. We're just going to, in this case, talk about CSR considerations when implementing change. Otherwise, it's the same topic as we did earlier in the year. So just to refresh, when a business implements change, so here's the business, this topic just says, can you consider the impact on owners, managers, employees, customers, suppliers, and the general community? And all we need to do is just go back and look at for each of these. So we take the owners, what do they want from the business? So they want for it to make profits, receive dividends, and so on. And then we just want to look at it in this particular aspect of the course. What are some possible positive impacts of change by the business on the owners? So it can create more profits, and that leads to higher dividends and increase in the share price. But there are negatives as well. For example, it might require the owners to put in more money for the change to happen. And in the short term, change, the share market doesn't like change. It can often result in a lower share price in the short term, and therefore lower dividends and capital losses. For managers, what do they want from the business? Well, that's the same as earlier in the course. They want secure employment, fair remuneration, etc. The positive impact is when they implement change, they can be rewarded. They also get to improve and develop their careers. What are some negative impacts? Well, they're the ones directly responsible for the change. So that's a lot of pressure and a lot of stress. And sometimes it can actually mean a change that management is the one that's being made redundant. Also, they're going to have to deal with employees who often resist change. What about employees? What do they want from the business? Well, similar to managers, secure employment, fair remuneration, job satisfaction, and so on. How can they be positively impacted by change? Again, they can be financially rewarded or non-financially rewarded. There's new business opportunities. Automation can help some employees, like in the Amazon factory, it can make some tasks easier. But the negative impact is obviously change often involves employees being made redundant or having to learn new things, which they often don't like to do. Customers, what do they want? They want to buy good quality products at a reasonable price with good service and so on. Positive impacts of change are often change results in a better product, so therefore customers are better off. Change often also results in lowering the price of the product or making it easier to buy. But the negative impact is if customers were attached to the previous product and they have to adjust and adapt, or maybe pay a higher price, they feel alienated because they like the old brand. Suppliers, they want the business to be profitable so they can be paid and become a preferred supplier. Positive impacts of change? Well, change might mean suppliers get more business and contracts from the business. The negative impacts for suppliers are maybe the supplier has to lower costs because of the change, or maybe they need to change what they're doing, or maybe the business even uses a different supplier. And lastly, the general community, they want to benefit from employment opportunities from the business. They want it to be ethical. They want it to benefit the community and not do any harm. Positive impacts for change might be the business is going to employ more people in the local community, pay more taxes, and be more socially responsible. Negative impacts, as change often involves sending, for an Australian perspective, jobs away overseas. That results in local unemployment and often less taxes to be spent on the community in Australia. So our second part of this particular topic was CSR. So we just need to know our definition. So make sure you're across that. It's a big definition, but it was on the exam a few years ago. But then all we've got to do here is just to consider for each of these stakeholders, what are some potential issues and what can we do about it? So for example, will the change result for owners, is it a change that not all owners agree with? So what can we do? We can allow owners to vote on whether to implement the change. And this is just not a set list. This is just lists of things that we came up with when we learned this topic, of just things you want to consider when it comes to the owners, and then what the business can do to help support the stakeholder. Likewise, we want to do the same for managers, some CSR issues to consider, and then what the business can do about it. Same for customers, some CSR issues that might arise, and then what the business can do about it. Same for suppliers. There's a tough one. We don't often consider suppliers, but here's some CSR issues and what the business can do about it. And finally, the general community. Just make sure we cross some of the CSR issues and what the business can do about it.